Channel, welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel, and while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful. Don't get yourself scammed. Do me a big favor, guys. Get down there in that description box, click on that Instagram link, and give me a follow on Instagram. Send me a DM, let me know that you're rocking with me, and I will definitely respond to you. Trying to get this Instagram page up to some bigger numbers when it comes to followers. And you guys can help me out with that if you don't mind. And that's if you are an Instagram person and you go on Instagram anyways and you want to kind of follow me when I'm not making YouTube videos, that'd be great. So give me a follow on Instagram. Like I said, link down in the description box, Richard Fain Millionaire Mentor. That's the name of the Instagram page. Certainly would appreciate any support you're willing to give me on that. So thank you very much. And the next thing I want to mention is the website, the Richard Fain Millionaire Mentor website. We launched it on April 15th, and it's been going really well. I appreciate you guys that have had the opportunity to go over to the website and check it out. I've gotten a lot of positive feedback from you guys, so thank you very much for that. Also, if you don't mind, take a look at the digital products. Could find something over there that can help you get to your pot of gold at the end of the rainbow. I certainly have handpicked all of the digital products, went through them, and all of them can help you get to your pot of gold at the end of the rainbow. You just got to make a decision if you want to make an investment in yourself and grab a few of them. My recommendation is grab a few of them. I know many of you already have. Thank you very much. And I'm waiting on the success stories that'll be coming back from you guys relating to these digital products and how they've helped you repair your credit, get your credit score higher, start an online business, help you scale your existing business or start an existing business. Start a new business, whether it be investing in the stock market, whether it be millionaire mindset, whatever you grab from the website in the form of a digital product, let me know if it helped you get to your pot of gold at the end of the rainbow, at least get you on your way. And then certainly the paid membership club through the website, you certainly are more than welcome to take a look at that. Again, many of you have already made that investment in yourself and became part of the paid membership club. We're going to be kicking that off in May, where I'll be doing 90-minute live streams with club members only, where we'll be diving into some, real estate deals. We're going to be diving into how to start businesses, how to grow those businesses, how to get business funding, all that good stuff. We're going to do that. We're going to talk about side hustles. Obviously, we're going to talk about paper assets in the stock market because that's a big one for me. And then we're going to talk about mindset. So we're going to be doing all of that stuff on a deep dive level in the live streams for the club members. So if that's something you think you want to be a part of, certainly through the website, click on the membership club link and get yourself signed up and ready to go. Last thing before we dive in to what we're going to be talking about in today's video is Moomoo, the 10 free fractional shares of the Magnificent Seven. If you guys have been following the Magnificent Seven for the last week or so, it's been incredible. NVIDIA, Microsoft, Alphabet, Amazon, Meta. So it's been amazing what has been happening over the last week with just the Magnificent Seven. So Moomoo is going to give you 10 free fractional shares of the Magnificent Seven when you click on my link down in the description box. First link in the description box. Sign up, put your $100 into your new brokerage account, they're going to give you for free 10 fractional shares of the Magnificent Seven. So if that's something that you want to take advantage of, guys, click on that link down in the description box and put yourself in the game. Put yourself in the game. Don't delay. Put yourself in the game, right? Don't delay. Get yourself in the game today by signing up for Moo, putting $100 in your brokerage account, and then getting the 10 free fractional shares of the Magnificent Seven. So let's dive into this concept of how do you make $1,000 per month in passive income. In order to create that $1,000 a month, you got to build a level of wealth, right? We don't just wake up in the morning and $1,000 in passive income comes to us. No, you got to create wealth first, right? You got to go out. You got to take your active income and you got to put that active income in something that will create passive income. See, right now, most of us are active income earners. We exchange time for money. I give you 8 hours, you give me money. I come to your business and do what you ask me to do for 8 hours to help you make money. And then in turn, you pay me money. That's active income. Or you may go to your own business, right? You may work in your own business. You're still actively doing something to create the income. Passive income is where you don't do really anything. It's work you've done in the past or investments you've made in the past, and now they generate income for you without you doing anything. So passive income is where you do nothing and you create income. Active income is where you do a lot and you create income. Both ways you create income. Passive is just the way you create income where you don't do anything. That's the position I want to be in. And most people would like to be in that position, or at least have the choice to be in that position, right? So that's what we're going to talk about today. And I think three main areas that I like to talk about when it comes to passive income is, stock market, right? Stock market is a way to create passive income through paper assets. And we'll talk about that. Also real estate, right? Now you can physically own real estate and create a level of passive income, or you don't have to physically own it and still create passive income through real estate. We'll talk about those two ways as well. And then I think the third way you do it is through businesses, right? Whether it be you as a direct owner of that business, or maybe you're a shareholder of a closely held business, not a public business, not a publicly traded business, but a closely held business. Or maybe it's a situation where you did some work and now you get a royalty stream that comes in for the rest of your life. I have a form of that right now through the YouTube channel. So all this, the 1,100 videos I have up on the YouTube channel, that's work I did in the past. But guess what? Every time someone watches one of those videos on the YouTube platform, I get a little bit of a cha-ching. And when you add that up over a month, it's a lot of income, but it's work I did in the past. So if I don't never have to make another YouTube video going forward, as long as those 1,100 videos that I have on the YouTube channel are there and active where people can watch them, I don't have to do any more videos. I'll get a certain level of passive income every single month because of work I've done in the past. So we'll talk about that as well. But let's dive into the first one, which is through stocks, ETFs, index funds, mutual funds. I like to just call it paper assets, right? How do I develop passive income through paper assets? Well, it's called dividends. So I got a couple different ways I can make money through paper assets, right? First one is through dividends. And then the second one is through the appreciation of the stock price, right? Let's take a look at dividends because that's the most popular one that people who build wealth, they take that wealth and they put it in stocks or they put it in ETFs or they put it in some type of paper asset. And then what happens is it creates a dividend, right? What is a dividend? Let's take a look at that first because I think that'll help us explain how these paper assets create this income. So what is a dividend? A dividend is the distribution of a company's earnings to its shareholders and is determined by the company's board of directors. Dividends are often distributed quarterly and may be paid out as cash or in the form of reinvestment in additional stock. Now, dividends can be paid out monthly too, but typically they're paid out quarterly, right? But they can be paid out monthly. Depends on the company, right? And it is determined by the board of directors, right? The dividend yield is the dividend per share and is expressed as a dividend, right, divided by the price as a percentage of a company's share price, such as 2.5% yield, right? Common shareholders of dividend-paying companies are eligible to receive a distribution as long as they own the stock before the dividend date, before they pay out the dividend. So if I own paper assets that pay out a dividend, maybe I got some individual stocks, maybe I got some ETFs, maybe I got some index funds, maybe even I got mutual funds. It just depends on what you have, right? But they can pay out a dividend based on the shares that I have in that company or that ETF or that index fund or in that mutual fund. It's based on my shares, right? Based on my shares. So understanding the dividend. Dividends must be approved by the shareholders, as we mentioned. Although cash dividends are common, dividends can also be issued in shares of stock. Various mutual funds and exchange traded funds also pay dividends. We just talked about that, right? So I make these investments into companies, right? Let's say I make $1,000 a month into, let's say, VOO, Vanguard S&P 500 ETF VOO. I make $1,000 a month. And that particular fund pays out a dividend quarterly. As I invest my $1,000, guys, I'm buying shares. I'm buying shares. I'm buying shares of that fund, or I'm buying shares of this individual company. Companies like AT&T, who pay a nice high dividend. Companies like Verizon, they pay dividends. And we'll talk about some companies that pay dividends here in a second, but I want to kind of give you an idea of how it works, right? So I'm buying these shares every single month. I'm buying these shares. A dividend is a reward paid to shareholders for their investment in a company's equity, and it usually originates from the company's net profits. So here's the thing. These companies, if you're investing in the right companies and they're profitable, they make profits. Right? Remember, over the last couple of weeks, we've been talking about the Magnificent Seven and the type of profits that these companies are making. Huge profits. That's why Alphabet came out this week and said that it was giving its first ever dividend to its shareholders because they've been so profitable, right? They're going to give them 20 cents per share that they own at the time the dividend is distributed. They're going to give them 20 cents per share. And what are they doing? Companies are taking their profits or part of their profits and they give them to their shareholders. Now, do they have to do that? No, but they do, right? And this is what we're talking about right here. A dividend is a reward paid to shareholders for their investment in a company's equity, and it usually originates from the company's net profits. For investors, dividends represent an asset, but for a company, they are shown as a liability, which makes sense. They're giving you something. That's something that they got to give you. They've said they're going to give it to you. Then it's a liability because it belongs to you. Even though they may not have distributed yet, it belongs to you. So it's a liability for them, but it's an asset for you and me because we know it's coming. right? So if the company that I invested in says, hey, we're going to pay you a quarterly dividend, this is what we're going to pay you, then that belongs to me. That's an asset. Though profits can be kept within the company as retained earnings to be used for companies' ongoing future business activities. Now, that's important because, see, some companies don't pay a dividend. Fast-growing companies typically don't pay a dividend. Companies like Tesla, they don't pay a dividend. Why? Because they take all of their profits and they reinvest those profits into continuing to grow the company. So they're not paying a dividend yet. A company like Amazon has been around for a long time, but they don't pay a dividend. Now, it's widely expected, though, they will start paying a dividend just like Alphabet started. See, Alphabet just started, AKA Google. They own Google, right? Alphabet owns Google, but people recognize them as Google, right? This will be their first dividend they pay. A company like Amazon hadn't even paid one yet. But the likelihood that they will pay, it's coming, right? So you got to understand, every company doesn't pay a dividend. Normally, the companies that pay dividends are your more mature companies, and they call them value companies. So you got growth companies and you got value companies. Typically, growth companies, depending upon where they're at in the growth, they don't pay a dividend yet. Typically, value companies pay dividends. Why? Because they're already huge. They've been around forever. And the way they attract new investors is by paying that dividend. A lot of times, growth companies don't have to pay a dividend because they attract investors because of the growth. Investors latch onto them, buy shares because they know those shares are going to go up in value faster than on average. Whereas with a value company, you may put money into a value company and it may not grow at all. But that doesn't mean it's not extremely profitable, and they will share that profit through what? Dividends. So that's what you got to think about. Why am I investing? What am I investing in? And will they pay me a dividend, or why they don't pay a dividend? You have to understand that, right? So let's keep moving through. Profits can be kept with the company as retained earnings to be used for company. We already talked about that. That's mostly growth companies who retain their profits. They keep their profits to reinvest back into growing this thing bigger and better, like Tesla, like NVIDIA, right? They don't, like Amazon, don't pay a dividend. But the growth in the stock price is where company like NVIDIA, in 1 week, their stock price goes up $100 per share. See, that's a growth company. See, I don't get no dividend from them, but I made a bunch of money just by buying the stock. And it goes up in value, even though they don't pay me a dividend yet. At some point in the future, they will. But right now, they're reinvesting back into growth. And I'm okay with that because why? Had you invested in NVIDIA last Friday, what was that? What was Friday? A week ago. Not Friday that just passed, a week ago. Can't get my dates right. But in 1 week, had you sold yesterday, Friday, it was up $100 a share. 2 Fridays ago, it was trading at 767, something like that, 762. Guess what? It closed on Friday at 877. That's why NVIDIA is such an attractive stock right now, because of that, right? Because of that increase in per share price within a week, $100 a share. So let's keep moving. Companies may still make dividend payments even when they don't make suitable profits to maintain their established track record of distributions. Normally, value companies do that again, right? Normally, value companies, even if they're not extremely profitable, they still pay the dividend. Why? Because they want to keep their investors, right? They still want to reward their investors, even though they may not make as much profit. Again, don't have to, but if you want to keep investors and you want to keep people investing in your company so that you do have the ability to continue growing revenue and trying to, get bigger, then you got to do something to compensate them. And normally companies that don't grow as fast, they use that dividend to compensate people so that they can stay in their stock. That's That's what most of your value companies do. Companies also can issue non-reoccurring special dividends, right? Either individually or in addition to a scheduled dividend. U.S. Bank Corp declared a 15 cents per share special dividend on February 23rd, 2023. See, so companies can do scheduled dividend payouts, or they can do a special where they can just say, hey, boom, we're going to give you this one-time deal, or in addition to your schedule, we're going to give you this special one. Just depends on the company, right? Just depends on the company. So dividend paying companies, larger established companies with predictable profits are often the best dividend payers, and the following industry sectors remain a regular record of dividend payments. Basic materials, oil and gas. See, oil and gas, the energy companies, man, they are, or utility companies, they are big dividend payers, right? Banks and financial services companies, guys, I was making great dividends in Bank of America and Wells Fargo. I'm still making it in the Bank of America, even though I liquidated my Wells Fargo to move that on to something else. I did it for years. They paid dividends for years like clockwork, right? So basic materials, oil and gas, banks and financial services, healthcare and pharmaceuticals, and I mentioned utilities. Utilities are huge, guys. So if you're out here looking for companies that pay good dividends, these are some of the industries you should look in, right? Basic materials, oil and gas, banks and other financial institutions, healthcare and pharmaceuticals, and utilities. They have a history of paying good dividends. So all of you guys, oh, what do I do with it? There you go. You got you some industries to look at. Companies structured as master limited partnerships and real estate investment trusts require specific distributions to shareholders. We'll talk about that in a second, right? We'll talk about that in a second because that'll fall under real estate. Right now, we're just talking about stocks. So we got an idea through stocks, basically what we're looking at. We're looking at growth companies, we're looking at value companies, and we already know growth companies typically don't pay a dividend because they reinvest their profits back into growing the business, AKA Tesla. But then on the other hand, we look at companies like ExxonMobil. They pay big dividends. Why? More mature company, right? Not growing as fast anymore, but have a history of strong profits. So they attract investors by paying that really good dividend, right? We may look at pharmaceutical companies like Pfizer or Merck, right? Big, gigantic companies, more mature companies. They attract investors by paying that dividend, right? You look at companies like Bank of America, Wells Fargo, JP Morgan Chase, companies like that, financial institutions. They're behemoths already. They're not going to grow as fast as Tesla. They're not going to grow as fast as NVIDIA, but they make more revenue and more mature companies than those companies. So they do what? They pay dividends to attract and keep investors, right? So those are your two. You got value companies, you got growth companies. Same thing with ETFs, right? You got growth ETFs like Vanguard Information Technology, VGT. That's a growth ETF. They don't pay as high of a dividend as, say, Vanguard Total Stock Market ETF, right? Because you got more value companies in there than you do got growth companies in a lot of cases, right? Or a 50-50 mix, like the S&P 500 is sort of like you got growth companies in there, you got value companies in there. So you're not going to get a crazy amount of dividend from an S&P 500 ETF, right? Because you got a lot of growth companies in there and they don't pay dividends, right? So if you want to go find an ETF that pays dividends, there are dividend paying ETFs. And all you got to do is go to the $1 trillion research lab and just type in top 5 dividend paying ETFs. Top 5 dividend paying index funds, and they'll list them for you. You can go through them and pick the ones that you like, right? Same thing with individual stocks. You can go in and say, give me the top 10 dividend paying individual stocks. Boom, it'll give it to you. And then you can go through them and figure out which one that makes sense for you, right? That's the key though. So let's talk about some of these companies where you can get these, and these are individual stock companies that you can get pretty good sized dividends from. Let's take a look at some of them that have really high dividends. You got companies. So you got the top 10 dividend stocks in the United States. Companies like Columbia Banking System. Now they are found on the NASDAQ. Columbia Banking Systems. This company is found on the NASDAQ. They have a 7.58% annual yield, right? Any terminology, guys, that you hear me say, write it down and go to the $1 trillion research lab. I can't spend all day telling you exactly what a yield is versus it. All you got to do is go to Google. Type in Google. What is a dividend yield? Right? That's all you got to do. Some of this stuff we got to research ourselves and become dependent upon our own self going out doing some research. You can't just have someone on YouTube tell you every single thing in the world. No, you got to go research some of it. Write it down, go research it. That's all you got to do, right? That's all you got to do. So I'm not going to be able to tell you everything about every company, but if you like one of these companies, then go out and research them and figure out what the dividend yield is, right? So here we go. Columbia Banking System has a 7.58% dividend yield. Guys, that's huge. That's huge. So for somebody that's already created wealth, let's just use me. If I've created my wealth and I'm saying to myself, okay, Richard, you got this. I'm just hypothetical here, guys. Okay, Richard, you got this $1 million. You worked your butt off for 15, 20 years. You got $1 million. Now you need to get income off of that $1 million. See, now I can go take that $1 million and I can go to a company like Columbia Banking System, put my $1 million in their stock, and then they paid me 7.85% annually on my $1 million. That's how you create income, guys, when you build wealth. See how because remember what I told you guys, when you're building wealth, what you really want to concentrate on is growth. Now, if I get a little bit of dividend, guess what I'm going to do with it? I'm going to reinvest it back into doing what? Buying more shares. Because remember, my dividend is based on my shares. So the more shares I have, hopefully, the higher my dividend payout will be. But a company like Columbia Banking System, which is found on the NASDAQ, and the ticker symbol is COLB. That's the ticker symbol on the NASDAQ. There you go. So all you got to do is 7.58%, right? See, this notion of I'm going to make passive income, but I don't have any wealth. No, that's a lie. You're not going to make passive income unless you have wealth or unless you've created a royalty from something. See, I can be dead broke, but if I got 1,100 videos on YouTube that are making money every month without me doing something, that's a royalty, right? That's a royalty. I get paid whatever that royalty is based on work I've done in the past. But without work I've done in the past or some type of asset to generate it, you ain't gonna get no passive income. A lot of people look at Social Security as passive income, which it is, but it's based on what? Work I've done in the past and money that I paid into the Social Security fund through taxes, right? So I don't just get Social Security for nothing. No, I paid something into Social Security. Now I get something out of it when I no longer work anymore. So passive income is about building assets or building a royalty stream for work you've done in the past, and then you get paid for the rest of your life for it without you doing anything. That's why it's called passive. I do nothing. That's passive. I'm passive. I do nothing. Active is when I'm doing something to make money. I'm doing something to make money is active income. Passive income is when I don't have to do anything. And I get paid for investments that I've made over the years, or I get paid for a body of work I've done in the past that continues to pay me income, right? So Columbia Banking System is one. The next one is financial institutions, right? That's on the NASDAQ as well. Ticker symbol FISI, paying a 6.89% yield. Arrow Financial, another one that's on that NASDAQ. Ticker symbol AROW, 4.7%. Evans Bank Corp, 5%. Regions Financial, 4.9%. Dillard's, y'all have heard of the department store Dillard's, right? They're big down here in Florida, but they're on the New York Stock Exchange, and their ticker symbol is DDS, 4.71 yield, guys. This is where you make the money at, guys. Once you've built your wealth, and a lot of y'all ask, well, golly, where do I get income once I build a wealth? Companies like this. You can take your wealth and put it in companies like this and create $1,000 a month in income, not a problem. Not a problem. But again, it's based on shares, right? It's based on shares. For instance, let's give you a quick for instance. And this is not a good example, but I'm going to give you this example. Let's just say you had invested in Alphabet. Now Alphabet is getting ready to pay a dividend. Let's say it's 20 cents per share. In order for you to generate $1,000 in passive income from Alphabet right now, you got to have almost $870,000 put it this way, you got to have 5,000 shares of Alphabet stock. So don't worry about the 870,000, because some people have been invested in Alphabet for years and years and years and years, right? So you need 5,000 shares of Alphabet at 20 cents per share to create $1,000 a month in dividend income. That's what you need. That's kind of how you got to look at it, as shares. It's the number of shares. It ain't, it's like, because some people may jump into Google today and this is the first time they bought any shares. They may jump in today, these are the only shares they've ever bought. But some people have been in. Back in when this thing started, people have been in. So that's why it goes on shares, right? You need 5,000 shares of Google, Alphabet, let's say Class C shares, and that would generate at that 20 cents dividend, that will generate $1,000 a month for you, right? So that's sort of how you get paid when it comes to dividends. And then you got Bank of Marion Bank Corp, 6.48% dividend. Let's take a look at AT&T, because that's another big one. Let's see what AT&T is doing right now, dividend wise. They got another really good dividend payout. And of course, let's see what the dividend is. AT&T dividend. 6.63, guys. That's AT&T right now. That's their annual dividend yield. Their quarterly dividend amount is 0.28, right? So you take that 0.28, and let's see what that is. Let's see, 0.28 times 4. 0.28 times 4, right? So you're getting like $1.12 based on whatever. Now that's based on your shares. So let's say I got 5,000 shares of AT&T times 1.12, right? That's $5,600. So and again, AT&T shares aren't that expensive. Let's take a look at, there's $16.75. So to get 5,000 shares, how much money do I got to put in that, right? Let's take 1675, 5,000. There we go. Let's see here. $1,000 divided by 1675. Yeah, it's not that much money because the stock is only $16.75, right? So you could literally take $5,000 Divide that by 16.75, and you could have almost 300 shares of AT&T stock with $5,000. Remember, you're going to make a $1.12 annual payout on these 300 shares. Let's just say you had 1,000 shares. And again, I've told you, it's not that much money, 1,000 shares. And then your payout is what? 1.12. So you're still going to make about $1,200 on that 1,000 shares. So my point is, it's all about the number of shares you got. It's all about the number of shares you got when it comes to dividend payouts, guys. That's why I keep telling you got to continue to invest in shares. Whether it be, like I said, whether it be ETFs, index funds, or individual stocks. Here's the thing though. If you're in the building stage of wealth, I don't necessarily concentrate on dividend stocks. I want to concentrate on growth stocks because I'm trying to grow my wealth. Once I grow my wealth, then I can transition to go look for income. But I need to build the wealth up before I can go look for income. So my thought process is, while I'm in the building stage of wealth, I'm going to be chasing companies like NVIDIA. I'm going to be chasing companies like Tesla. I'm going to be chasing fast growing companies. I'm going to be chasing ETFs and index funds that can give me at least an 8% annualized rate of return. Those are the type of companies I'm going to be chasing because I'm trying to build my wealth. I'm not necessarily worried about the dividend right now. The dividend will come later. I'm more worried about building wealth right now. And then I'll think about income creation, income down the road, right? See, I don't care how big AT&T's yield is. I don't care how big another company's yield is. It doesn't matter if I don't have enough wealth. If I only got $1,000, $2,000, $3,000, $10,000, that's not going to generate from a dividend standpoint. It's not going to generate $1,000 a month, right? It's not. You got to have some significant money in there. 250K, 500K, when you start really generating some really good money. So if I got 500K and I can get a 6% rate of return on that 500K, that's $30,000 a year in income, guys. But I got to have the 500K. See, I can get a 6% return on $5,000, but it's only going to generate what? $300 a year. If I got $5,000, it generates $300 a year. If I got $500,000, it generates $30,000 a year. So when I'm in the building stage of wealth, I don't concentrate necessarily on chasing dividend stocks. I don't concentrate chasing ETFs that have a dividend. I don't chase index funds that have a dividend, because normally if they're growth, they're going to have a no dividend or very small, right? Once I build my wealth, once I get to the golden years and I got this nest egg, then I can go chase dividend, because now I got enough wealth that can justify generating enough income for me. So that's how I would use paper assets to build my wealth. And what I really wanted to show you was there are companies out there that you can go get a really good dividend yield on an annual basis and make a lot of money, make $1,000 a month in passive income. But you got to build the wealth first. There is no, okay, I got $5,000, Richard. How do I get $1,000 a month in dividends off my $5,000? You're not going to get it. I don't know of anything where you will get it. You won't. Now, if you got $500,000 all day long, like I told you, you can get a 6% yield and make you $2,500 a month. On 500K, you can make $2,500 a month in income by finding something that'll pay you a 6% yield. And again, guys, that's not very hard. It's not. I just gave you 7 or 8 stocks that'll pay you a yield of 5 or 6% or better. Couple of them paying over 7%. AT&T will pay you 6.63% annual yield in dollars, right? So I'm just telling you, they're out there. They are out there, but you got to build the wealth first, or you got to create a royalty. And we'll talk about that in a second. So let's move on and talk about real estate, right? How do I generate $1,000 a month in real estate? Well, here's the thing. You got two ways. You can own the real estate yourself, right? Where you own and manage the tenants and toilets, right? You can do that. You can own the real estate yourself, but that's not 100% passive, right? Because you got to still do something. Not very much, but you still got to do something, right? If you're managing the property, you still got to make sure the tenant is taken care of. You got to go over there and check on the property every now and then. So it ain't 100% passive, but it's passive because you ain't got to be there every day. You ain't got to give time every day. Maybe you get over there and check the property once a quarter, as long as the rental check is coming in, right? So it's not 100% passive, but it's passive enough. That's real estate that you own. That's real estate that you have the deed to. It's your property. But you could also look at things that they call real estate investment trusts, right? You can take a look at those that are really, really popular. But again, you got to have your wealth already together when you put your money into one of these things, right? You got to already have wealth. You can't say, well, okay, I'm going to take my $1,000 a month and put it into this real estate investment trust and I'm going to get $1,000 a month. And no, you got to have money. You already have wealth. Then you put it in there and you can get a bunch of money. But let's talk about this real estate investment trust. Real estate has long been a cornerstone of wealth generation. I've told you guys that over the years. Real estate was one of the main staples of my portfolio when I was building my wealth over the last 25, 30 years. Real estate played a big part of it. Now, it wasn't necessarily real estate investment trust. It was where I actually owned the real estate, right? I owned the brick and mortar. I owned and had to manage the tenants and toilets, right? But this is an option or an alternative for you. So real estate has been a cornerstone of wealth generation, and as 19th century British philosopher and economist John Stuart Mill once said, landlords grow rich in their sleep. That's true, because guess what? I didn't have to do anything. Even while I'm sleeping, even with stocks, even with ETFs, even with index funds that pay a dividend, just like with real estate, while I'm sleeping, since it's passive, I'm earning. I earn 24 hours a day, 7 days a week, 365 days a year. That's passive income, guys. I earn money while I'm sleeping. Active income, I earn no money while I'm sleeping. I only earn money while I'm awake and I'm giving somebody my time. That's the difference, right? That's the difference. However, being a landlord isn't always as passive as it seems. That's exactly what I said earlier. When you own the physical property itself, it's not 100% passive because there is some of your time you do have to give, right? It's not 100% passive, right? You got to screen tenants, you got to prepare leases, you got to handle maintenance, you got to chase rent payments, right? So you got to do all of that stuff when you actually own the property and you don't have a management company. It's just you doing it, right? Fortunately, there are ways to earn monthly rental income without the hassle of being a landlord. One popular option is investing in real estate investment trusts, right? REITs. That's short for real estate investment trusts, which are essentially giant landlords that own income producing real estate and collect rents from the tenants. REITs are required by law to distribute at least 90% of their taxable income to shareholders as dividends, making them an attractive choice for investors seeking passive income. That's why real estate investment trusts are so popular, guys, because they're mandated by law that they got to take 90% of the profits and distribute it to the shareholders. That's very attractive. But again, guys, you got to have wealth to put into one of these things to get any significant amount of passive income. Yes, could I buy a REIT with $100? Yes. But how much passive income are you going to get? Pennies. That's not enough to take care of you. Yes, can I put $1,000 in a REIT? You're going to get pennies. Yes, can I put $10,000 in REITs, you're going to get dollars. The only way to get $1,000 or more, you got to put some significant wealth inside of that REIT in order to generate significant passive income, right? And we're going to talk about what would be significant in this scenario here in a second. Don't miss, passive income investments are one of the most trusted methods of riding out a recession. So it's no surprise that people are turning to these high yield real estate notes that pay a fixed 7.5 to 9% ROI, right? Realty, here's one of the companies in this scenario right here where you can make $1,000 a month. I thought this was pretty interesting. But again, guys, I need you to always remember, you got to have wealth. You got to have built wealth, right? In order to get this. There is no $1,000 a month in passive income and all you've invested was $5,000. But I want $1,000 a month in no, that don't exist. That won't exist unless your assets are high enough to generate that, or you've developed some passive income stream through royalties or something like that, right? It's nothing for free. There is no $1,000 a month unless you have built your wealth, and then you can put your wealth into this and create your $1,000 a month. So here's the scenario. Here's the name of the company, Realty Income Corp, right? New York Stock Exchange company. Again, write them down, go out on the Google, research them, see if it's something that you're interested in. So Realty Income Corp, known as the monthly dividend company, in a prime example of a REIT that pays its shareholders on a monthly basis. With a 55-year operating history, Realty Income has declared 646 consecutive monthly dividends and has increased its payout for the last 25 consecutive years. The company currently offers 5.75 dividend yield with a monthly dividend of 0.257 per share. So that's slightly better than AT&T was doing. No, it's not. I apologize. That's less than AT&T because AT&T was doing 0.28 cents. So it's less than AT&T, but it's still pretty good. To earn $1,000 per month from Realty Income, an investor would need to own approximately 3,891 shares, which at the current share price of $53.66 would require an investment of around $208,791, right? That's what you would have to have in assets to put into this particular company. Then that would give you almost 3,900 shares and you would make $1,000 a month, right? So again, there ain't no free passes, guys. There is no secret sauce where, oh, I don't have that much, but I still want $1,000 a month. No, get your butt out here and earn some money, earn some assets, grow your assets, and that's when you make the money. You don't make money passively if you've not done anything to earn it. I'm not sure why in this country we think we're supposed to get $1,000 a month, $2,000 a month, passive income when we ain't done nothing to earn it. You got to earn it. Then you can get it, right? Build your wealth, right? Live on less than what you make. Live on a plan. Stay out of consumer debt. Save and invest, and you can make your $1,000, $2,000, $3,000, $5,000 a month in passive income. But if you're not done any of that, why do you think you deserve making $1,000 a month? You don't. I don't. If I don't put in the work, I don't deserve it. So let's get off of this notion of, oh, there's some secret way to make $3,000 a month in passive income like people are telling you on the internet. It's crap. No, it's not. Who's going to pay you $3,000 a month and you ain't done nothing? It don't exist. There is no shortcuts. We got to stop looking for shortcuts. No, pay the price, delay gratification, build your wealth. And like I've always told you, there are plenty of places out here to get income, AKA this company right here. Plenty of places to get income, but no one's going to give you passive income if you've done nothing to earn it. Please understand that. This would be, what did one comment say? Oh, you just chastise us. No, I'm not chastising you. I'm just telling you the truth. That's all. You do whatever you want to do. You're not my child. I don't have control over what you do with your money or your mind. I'm just telling you the truth. There is no passive income unless you earn it. I don't know why we think it is. Oh, this guy on YouTube said I don't have to do any of that. I can get $1,000 a month passive income. How? How are you going to do that when you've not earned it? How are you going to do that when you've not built any assets to generate it? How are you going to do that when you have done nothing in the past that gives you royalty income on a monthly basis? How do you generate it? Please, somebody tell me in the chat. Please tell me, how do you generate $1,000 a month if you've not done anything? You don't. This is my point. To earn $1,000 per month with royalty income, an investor would need to own approximately 3891 shares. At the current share price of $53.66, require about a $209,000 investment. Now, if you don't have that, for a more modest goal, you could do $200 per month. If you want $200 a month in income, an investor would need roughly 778 shares, or 41,747 worth of realty income stock. So you can still get the dividend, guys, but the bigger the investment, the more passive income dividend you get. The smaller the investment, the less you get. That's the way it works. You don't have to put 209,000 in there. You can put 50 grand in there. You can put 40 grand in. You can put 30 grand in there, 10 grand. But whatever you put in there is going to be commensurate to what you get out. There is no, I'm going to put 10 grand in and I'm going to get 1,000 a month. That don't exist, guys. I hate to tell you. That's more like a scam. It don't exist in the real world where people have gotten out here and built their wealth over 10 or 15 or 20 years, and then they take that wealth and then they generate a really good, nice income for themselves. That's how it works. This notion of I'm just going to put $1,000 in something, I'm going to put 5,000 in something, and I'm going to get 10,000 a month and pass it. Come on, guys. Y'all know that's ridiculous, right? That's ridiculous. While REITs, like realty income, provide an accessible way to invest in real estate without the responsibilities of property management, they come with their own set of risks. REIT shares can be volatile, and dividends are not guaranteed. But dividends are not guaranteed, guys, in any of these investments. None of them. None of these people have to pay you a dividend. They do, but none of them have to. None of them have to pay you a dividend, right? Not REITs, not individual stock companies, not ETFs, and not index funds. None of them do, right? YouTube could say tomorrow, guess what, guys? We ain't paying this no more. You can keep your videos up here for free for people to look at them, but we ain't paying you no more advertising fees. They can do that, right? Nothing's guaranteed in life, but one thing is guaranteed that I know is, as long as I got assets, I'll find somebody out here that'll pay me. Somebody's going to pay me for my assets, for me to put my money in their company, or to put my money in their ETF, or to put my money in their index fund. Someone's going to pay me. I know that. So always having the assets, someone's going to pay me somewhere. I don't care if I got to go to my local bank and put my money in a CD. I'll get 2 or 3% return on that CD. Someone somewhere will pay me if I got assets. If I don't have any assets, nobody's going to pay me. Nobody. Nobody pays you if you don't got no assets, guys. So just keep that in mind, right? Nothing's guaranteed, but one thing is guaranteed. If you don't have no assets, I guarantee you no one's going to pay you. Nobody's going to pay you with no assets. So just know that, right? Realty income shares have fallen about 13% in the past year, though some analysts see a potential rebound in the horizon. So moral of the story is, I can make $1,000 a month several different ways. I can make it by investing in paper assets over the years, grow my paper assets. Then I can take those paper assets out of whatever they're in that's not paying me a dividend. Once I grow them, I can take them out of whatever's not paying me a dividend, and I can move them over here to something that will pay me a dividend. That's where the income side. So I got the growth side, and then I got the income side. What's really important in the growth side is when you're growing, and if the S&P 500 that you're invested in is paying a dividend, that you reinvest it back into buying more shares. Remember, shares is what my dividend is paid on, how many shares I own. Before I sold my Wells Fargo stock, which I just sold it about a week ago at a really good price. But before I sold it, I had over 6,100, like 6,150 shares, which generated about $2,000 in dividends per quarter, or $8,000 a year. For years I did that. And guess what I did? I just reinvested it into buying more shares. So over the last couple of years, as Wells Fargo's stock was low from a share, it was in the 20s. It was in the 20s. I was getting this dividend every single quarter, just buying these cheap shares of Wells Fargo. And then all of a sudden, Wells Fargo goes from the 20s, over the last 2 years, guys, it went from the 20s all the way up to $60 a share. So all of those shares I was buying through reinvesting the dividends, not taking the dividends, but reinvesting them, I was just dollar cost averaging in, buying cheap, all the way up to $60 a share. And then I sold it. That's the key. But I generated so much wealth by just reinvesting the dividends because I didn't need it. I didn't need the income. So all I'm telling you guys is, if we're chasing dividends right now and we haven't built wealth, rethink that. Rethink it. Rethink, chase growth. And whatever dividends they pay you, reinvest them back into the growth. Once you get the achieved or your desired growth in your net worth, then take the net worth and go chase income, right? That's what I would recommend. I would recommend that. And then, like I said, the third way I think you can create passive income is through like a royalty stream, or through an investment you make in like a privately held business, right? There are businesses around your area that you live in. There are businesses around the country that are not publicly traded companies. They don't trade on the New York Stock Exchange. They don't trade on the NASDAQ. Where they trade is privately. They're held privately. But they do advertise, hey, we're looking for an investor to add this much money to our company, and we will give them this much in stock, or we'll give them this much in income, right? Some companies will say, hey, we don't want to give you any stock, but we'll give us a loan, and we'll pay you 8% interest on that $100,000 that you give us. You don't own any stock of the company, but you have a loan to the company where you can get 6, 7, 8% return on your $100,000 or your $50,000, whatever you put in. They will give you an interest rate, and that's passive income, guys. That's passive income. There are companies all around the country that do that. They borrow money from just regular individuals like you and I, and they pay us an interest rate. We don't own any of the company. And honestly, guys, I don't want to own any of it. I just want to be able to give you a loan and I get an interest rate. Now, you're going to collateralize that loan through what? Maybe stock. I may collateralize it through the real estate that you occupy. I may collateralize it through the rolling stock that you deliver your product with. I can collateralize my loan many different ways. I just look at that. I just look at the balance sheet for the company and say, hey, cash flow looks good, but to make me feel more comfortable, I want to put a lien on the rolling stock. I want to put a lien on the building. I want to put a lien on the IP. That's all. And I get passive income from that loan. Or like I said, you build a royalty stream like I did here on the YouTube channel. I got 1,100 videos on my YouTube channel. All of those videos are monetized. None of them are demonetized. They're all monetized. So every single month, depending upon the views and the ads that run on those videos when people are watching them, those 1,000 videos for work I've done in the past pays me money. Whether I never make another video, never do another live stream, as long as YouTube allows me to keep those videos on their platform and they run ads on them, I'm going to get some cha-ching. That's a way to create passive income as well. I like to look at it as a royalty stream. Same thing I did when I played in the NFL for my 3 years. I only played 3 years. I didn't get rich. I didn't make a lot of, relatively speaking, I made some money, but I blew it. But for the 3 years I played in the NFL, now I get a royalty stream for the rest of my life. I get about a $20,000 a year royalty stream from the NFL for work I did in the past. I don't have to never do anything for the NFL, but I get it for the rest of my life. So all I'm telling you is you can create passive income by work you've done in the past if you do it the right way. Plus you add in your assets, you can have a good lifestyle. So as you're out here trying to build side hustles, think about building side hustles that have a residual stream of income attached to it. That's why I love the YouTube platform, because there's a residual stream of income associated with the YouTube platform. As long as I have my content, as long as they allow me to keep my content on their platform, they will pay me a part of the ad revenue generated by people watching my 1,100 videos that I've done over the past 4 years. That's how you create passive income. There is no passive income without you putting in some work. So the notion of us, oh, golly, I'm just going to create passive income and I put in no work, that's fooling ourselves. That's not true. That's not true. And anybody that's telling you that, I would be leery of them. You got to put in some work, guys, that create passive income. You either got to put it in through taking your money that you've earned from your W-2 job, your 1099 job, your own business. It doesn't matter what it is, guys. It doesn't matter what it is. I don't care what you sell. Initially, somebody had to put some work into whatever you sell, right? It doesn't matter. Somebody did something, right? Oh, no, I did nothing. I just bought this business that's already existing. Guess what? You still put money into the business. Nobody handed you a business for free that generates $1,000 a month in income. Nobody. No one's going to do that. No one's going to give you a business for free that generates $1,000 a month in income. It's not going to happen, guys. I don't care what you say. You can say whatever you want to say about whatever product. It doesn't matter. Doesn't matter. The only way you get an income stream is you pay for it. So if I say, hey guys, goodness gracious, I'd love to have me a $5,000 a month income stream. No one's going to come hand me that for free. It doesn't work that way. You're going to pay for it. And there are income streams out there like that. Man, you can go out and find you a vending machine business that's already up and running, has cash flow attached to it. You can buy the cash flow, but you got to buy it. No one's going to give it to you for free. You buy the cash flow stream. Same thing with a laundromat. I can go find a laundromat right now full of machines. Somebody else own it. They can sell it to me and I can buy the cash flow stream, right? You can do that. So there are many ways, but the key is I've already built wealth to the point where I can afford to buy the cash flow stream. There's nobody going to come to me and say, hey, Richard, here's a $3,000 a month cash flow stream. Thank you for just being a nice guy. You don't have to pay me for it, though. That don't happen, guys. Sorry. So all the passive income videos we watch on YouTube or TikTok or wherever we watch them, there is no free passive income stream. Either we're going to take our hard-earned money and invest it in assets that build up that we can turn into a passive income stream, or we're going to take our wealth and pay for something that already has an income stream attached to it. Or I can get out here and bust my butt, like creating videos and other things or products or IP or something that I've created that will generate income for me when I don't do anything else. Those are the ways, right? Those are the ways to be able to do that. So here's the thing. If we want to create passive income, we got to think about earning money and then what we do with that money. We got to think about using our filter system to come up with products or services or material or something that value can be placed on it. So when we don't do it anymore, the work we've already done continues to get an income stream from it. Those are your two ways. Actively earn income, invested in assets over a period of time. They build up your net worth. You can take that net worth and, just like I said, either real estate investment trusts, individual stocks, whatever. You can take that wealth and put it in those things, just like I've given you here today. You can take that wealth and put it in AT&T. You can take that wealth and put it into this real estate investment trust that I mentioned. You can take that wealth and put it in companies like Columbia Banking System, right? You can put that wealth into Arrow Financial, Evans Bank Corp, Dillard's, right? You can put it into companies like Exxon Mobil. You can put it into utility companies and generate passive income, right? But again, no one gave me that. I worked my tail off. I earned wealth. I built wealth. And then I took my wealth and I created passive income, right? Or I was creative. I built a business that can throw off what? Royalties or residual income without me doing anything else. Those are my ways, right? There is no shortcut for that. No shortcut. At the end of the day, I still got to earn, right? I still got to earn income. I still got to take care of that income, and I still need to invest it. If I do that, $1,000 a month is not it's a piece of cake. $12,000 a year is a piece of cake, right? I can have a $250,000 asset. I can have a $250,000 asset and get a 6% rate of return, which I've given you many ways on here where you can get that through these companies. And there are more out there. All you got to do is go Google them. Individual stocks that pay a dividend over 6% yield a year. That's all you got to do. They'll come up. And then you can pick and choose the ones you want to put your money in. The key, though, is you got to have some money. The key to $1,000 a month in income, you got to have some money. So anybody that clicked on the video thinking, oh, I want $1,000 in passive income. I ain't got no money. And I don't want to do anything. Somebody's just going to give it to me. No, you know better than that. I don't know why you know better than that. Nobody going to give you anything. You got to earn it. So $250,000 investment at a 6% rate of return generates $15,000 a year for you. So if you want $1,000 a month, guess what? Let's do this at a 6% rate. There you go. Get your $200,000 net worth. Get you a $200,000 net worth. Get you a 6% rate of return. There's your $1,000 a month in passive income. So anybody out there wanting to know, how do I generate $1,000 a month in passive income? Guess what? I've just given it to you. $200,000. That's what you need to have your net worth up to. Investable assets up to $200,000. And then there you go. Well, when I get there, what companies can I put it in to get that kind of? No one's going to give you a 6% yield. Yeah, they are. Columbia Banking System is paying a 7.58 dividend yield. AT&T is paying a 6.63 dividend yield. Financial Systems, they're paying a 6.89 dividend yield. Bank of Marion Bank Corp, 6.48 yield. Citizens and Northern Bank, 6.35 yield. So I don't know this notion of no one's paying that. Yeah, they are. Plenty of them are. But they're not going. But you're not going to get $1,000 a month unless you got $200,000 in income and can get a 6% yield, right? That's it. That's what you got to do. Let's do utilities. Utilities, dividend stocks, Duke Energy, right? American Electric Power. Here are your highest ones right here. Your 7 highest ones. Duke Energy, Dominion Energy, American Electric Power, WAC Energy Group, Next Era Energy. These people are paying high dividends, man. These utility stocks. And there are many more out there. You can go into the pharmaceutical industry and pull those companies up. See what Merck, Pfizer, right? Those guys are paying. So my point is it's out there, guys. So this notion of you can't find it, yeah, you can. You just got to have wealth. Or you've got to create a residual income stream. One of the two, or a combination of the two. I'm fortunate where I just decided 4 years ago, I'm gonna get on YouTube and start making these videos to try to help people. And guess what? Now, 4 years later, I got 1,100 up there. Listen, I'm not the highest viewed guy on YouTube, but that's cool. Because I understand how YouTube works. I understand the power in numbers. So I got 1,100 videos out there. All active, all earning something. 5 cents, $5. But when you times it by 1,100, yeah, it makes it a little significant, little piece of money, right? So you got that. Then you got my assets, right? Then I got my assets. And then guess what I got? The ability to continue to earn money. High income skill set that I then do what with that high income skill set? Turn that money into more assets. Continue to make more videos. At some point, I'm gonna have 3,000 or 4,000 videos on YouTube and just let them ride. And if they generate $5,000 or $6,000 a month, perfect. As long as YouTube allow me to leave them up there and people watch them and they get ad revenue, cool. So all I'm saying is, listen, there's ways to do this, but you got to be willing to put in the work. There's no free passes, right? There's no free passes. Figure out in your mind, what type of income do I need? If I want $1,000 a month in income, $12,000 a year, just think to yourself, I need at least $200,000 in investable assets. I need $200,000 in net worth that I can then take that net worth. And when I say net worth, I'm talking about assets. I'm talking about paper assets or real estate, right? Or cash, right? If I got $200,000 in cash that I'm just sitting around thinking, okay, how do I maximize this? Take that cash and go put it in something. Now, a lot of people got their money in money markets right now. That's paying decent. Nothing wrong with that, right? Nothing wrong with that. But if I'm looking for a higher yield, 6%, 7%, you're probably not going to get that in a money market. So you're going to probably have to go somewhere else to get that. But if you're okay with a 3, 4, 2% to 2% to 5% yield, stay in your money market or go get your U.S. Treasury bond. You got a 10-year U.S. Treasury bond right now sitting at 4.5 to 4.6 range, guaranteed for 10 years. So if I already got wealth and I'm looking for, if I'm looking for a 4 to 5, 6% return on my money, 4 to 5% return on my money, a U.S. Treasury bond might work for you. Guaranteed rate for 10 years. Guaranteed. But the key is I gotta have wealth in order to get any of this to make any sense, right? To get $12,000 a year or $1,000 a month in passive income, I need at least $200,000 at a 6% rate of return. That'll give me $12,000 a year pre-tax. That's all you got to do. How do I do that? Well, earn. Take the money that you earn. Don't buy stupid stuff. put it in assets. Do that over a period of years, you're there. You're there. Put it in something that's growing faster than 8%. That's it. Put it in something that's growing faster than 8%. And you do that over the next 10 years. Take $1,000 a month, put it in an S&P 500 ETF. Do that every month for the next 10 years. Then you got 200, matter of fact, yeah, you'll have about $200,000 in that account. Then you can take that 200,000 after 10 years and go put it in something that'll generate $1,000 a month for you. So I took my active income of $1,000 a month, my active income. This is where I was trading time for money. I took $1,000 of that money that I was making and I put it into an asset. And I did that every month for 10 years. Now, that asset that I've built over the last 10 years replaces this $1,000 a month that I was making. See, I was actively making this $1,000 a month. Now I'm making a passive $1,000 a month. Took me 10 years to do it. Well, that's too long. I don't want to wait that long. We'll do it in 5 years. Put $2,000 a month in. Do it in 5 years. You're going to come up with the same result. Do it in 5 years, but you're going to put more money in. You're going to put more money in. See, that's the key, guys. I tell y'all every day, just as an FYI, that's how you do it. If you want $1,000 a month in passive income, I've just told you exactly what you need to do. Take $1,000 a month, put it in an S&P 500. On average, that gets an 8% return over 10 years. It'll create a couple $100,000 in assets. Take those assets, go find something like these companies we just talked about that are paying over a 6% annual yield. I've given you 5 or 6 of them, but there's thousands more out there. Just go on the internet and find them. Put that $200,000 in one of them companies. Boom, you got $1,000 a month coming in passive for the rest of your life. So you got to do, man. But it requires you to put some work in. It requires you to put some effort in, right? Like I said, if you want to get down to the description box and click on that Moomoo link, they're going to give you 10 free fractional shares of the Magnificent Seven. Now, if you're trying to build wealth, I don't know how you go wrong with the Magnificent Seven. I don't know. I've given you guys over and over why it's a smart idea to consider the S&P 500, why it's a smart idea to consider the Magnificent Seven. Why? Because these companies are growing above 8% on an annualized basis. One quick thing, and then we're going to get out of here. Morgan Stanley is doubling down on NVIDIA. Guess who you're going to get in that guess who you're going to get in them 10 free fractional shares of the Magnificent Seven? Potentially, you're going to get NVIDIA. You're going to get a fractional share of NVIDIA. Why is NVIDIA so always on your radar? Because it just went up $100 a share in 1 week. But I told y'all that 2 Fridays ago. If anybody was around 2 Fridays ago when I got on my live stream at 10:30 a.m. and when I got on my live stream that Saturday morning the following Saturday morning, a week ago, on my 10:30 a.m. live stream, I said, guys, NVIDIA closed at $7.62 a share. Monday morning, I'm all in. Who was in that chat on last Saturday when I said that? So this notion of, oh, you don't tell us you don't give us any tip. No, I'm giving you tips. You just don't do nothing with it. If anybody was in my live stream last Saturday morning at 10:30 a.m. Eastern time, what did I say? I said, guys, NVIDIA just closed on Friday at $7.62 a share. I said it's heavily discounted. Put it on the watch list. I said, guess what I'm doing on Monday morning? A week later, guess what? It's up $100 a share. Had you listened, had you took action, guess what you'd have been up right now? More than $100 a share. So I don't know what else I can tell you. You know what I'm saying? All I can do, guys, is give you the information that I have. All I can tell you is what I'm doing. Whether you execute or not, that's on you. That's on you. You got to execute, guys. You can't just, you just can't sit here and wait for something to happen. No, you got to make it happen. You can't just wait around for, oh, golly, it's going to happen at some point. I'm just going to wait. I'm going to wait for the crash. While you waiting for the crash, people done made $100 a share on the video while you waiting on the crash. Keep waiting on the crash. You waiting on the crash, people are made a fortune on the video in 1 week. In 1 week, while you waiting on the crash. Oh, I'm on the sideline, I'm in all cash, I'm waiting on the crash. Okay, I just made $100 a share in the video. Keep waiting on the crash. Go ahead, keep waiting on the crash. Keep on waiting on the crash. I'm sure it's coming at some point. But until the crash come, I'm gonna keep making money. And then when the crash get here, I'm gonna make even more money because I'm gonna double down. Keep on waiting on the crash. Keep on waiting on the crash. You'd have put 100,000, and I know this is a lot of money, guys. I'm just trying to give you an idea. If you had 100K, you'd have put 100K in the video and caught that 100K, $100 a share upswing. That was an easy 15, 16, 17 grand 1 week. If you put 200 in, double it. If you put 300,000 in, double it, well, triple it. And I know that's a lot of money, but I don't care what you would have put in, you'd have been up. Even if you put $2,000 in, you'd have been up. That's all I'm saying, guys. We gotta start thinking and saying to ourselves, what's the precedent? Have they done this before? Guys, they've gotten to $975 well, $974 a share a month ago. March 25th, they got all the way up to $974 per share. Less than 2 Fridays ago, they were down to $762. And in 1 week, they bounced back up to $877. Now, here's the other catalyst that's coming for you guys who want to rock with in the video like I am. They got their earnings report coming out in May. That's the next catalyst. If they hit that thing out of the park, guys, I'm telling you, this stock price going to $1,000 a share. I'm just telling you. That's my opinion now. I ain't no expert. I'm no analyst. I'm no expert. I just feel like if they come out with a first quarter bang, that's why Morgan Stanley is all over these guys. That's why Morgan Stanley is giving them a price of $1,000 a share. Because I'm telling you guys, when you look at the chip space for AI, these guys are the leaders. They own like 80 to 90% of the market share. Just think if they're trading at 877 today and they hit it out of the park for the first quarter, coupled with the anticipation of sometime later this year, the Fed lowering rates. I don't know, man. I just think for me, it's a play that if you know what you're doing, you can make some money. So you guys got to make your decision on that. I've given you what I think is appropriate for me to give you. I've given you my opinion on how do you make $1,000 a month. Passive income, I've told you exactly how do you do it. And I've given you examples of stocks that are paying over a 6% yield. I've given you examples of industries and individual stocks. I've given it to you, right? So that's up to you, right? I've also given you companies that are growth companies that you can invest in potentially. Nothing's guaranteed, but you can invest in potentially and get yourself some growth. Companies like NVIDIA, companies like Alphabet, companies like Microsoft. I just told you a few days ago. Let me just take a look at what Meta is doing. Because I know some of y'all was on the call when I told y'all about Meta as well. So now Meta closed. Check this out now. Meta closed at $443 a share. What was Meta trading at on Monday? Or not Monday, but when did they have their earnings? I think their earnings report came out, what, Tuesday? Tuesday or Wednesday. Whatever the day the earnings report came out, the very next day, what was it trading at? It was trading down like in the 420 somethings, right? I think Meta was trading after their earnings came out. It was in the 420s. Now it closed Friday at 443. What do you think gonna keep happening to Meta? It's gonna keep going up because nothing wasn't wrong with their earnings report. They had a great earnings report. It's just what the CEO said after the earnings call or during the earnings call. So could it get back to 450, 455, 460, 470? Sure. It was down $60. It was down 60 some dollars a share, guys. This was 2 days ago when I told you that. I said, if you want to put something on the short list, put Meta on the short list. It's the stock price is down by 60 something dollars. That's upside for you. Who took advantage of it? I don't know. But I try to give you guys real life examples of big boy stocks that you can make some money in. But it's my opinion. But whether you take advantage of it or not, that's on you. All right. So appreciate you guys. I hope y'all have a wonderful Saturday. I'm going to get ready to get on out of here. A couple things real quick before I do. Certainly get down to the description box. Click on that Moo link. Get your 10 free fractional shares of the Magnificent Seven today. Sign up for Moo. Put your $100 in that brokerage account and get yourself 10 free fractional shares of the Magnificent Seven. Apple, Microsoft, Meta, Amazon, Alphabet, Nvidia, and Tesla. Free for just putting $100 in your new Moo brokerage account. I don't know how in the world anybody trying to build wealth can pass that up. I don't know. I don't care if you got 5 brokerage accounts. Oh, I'm with TD Ameritrade and I love them. Keep loving them. But how do you pass up 10 free fractional shares of the Magnificent Seven? TD Ameritrade ain't going to give it to you. I can promise you that. So keep loving them, but they ain't giving you nothing but some fees. That's what they're going to give you. They ain't giving you nothing but some fees, right? So love them all you want, guys. These companies ain't going to give you nothing for free. Now, no, ain't giving you nothing for free. No, Moo ain't giving you nothing for free either. But they are giving you these 10 free fractional shares. Whatever that's worth. I don't know. I don't know what it's worth. But whatever it's worth, it's free. And it's the top 7 companies in America. So I don't know how you pass up the top 7 companies in America after you've heard me tell you exactly why they're the top companies in America. When you look at Nvidia, $100 a share stock price increase over the last week. When you look at Meta, when you look at Microsoft, what it did this week when it came out with its earnings report, what Meta did when it came out with its earnings report this week. They're killing it, dog. They're killing it. How do you pass up free shares of that? Well, you shouldn't. Get down to the description box, click on that Moo link, go get that free money, go get that free stock. Also, don't forget to check out the new Richard Fain Millionaire Mentor website. That's the second link down in the description box. Go check that out. Go take a look specifically at those digital products that I handpicked. Make an investment in yourself, guys, and get to your wealth. Get to your pot of gold at the end of the rainbow. Check out those digital products and grab you a couple of them. Also consider the membership club, the paid membership club. We're going to kick that thing off in May. It's already up and running, but when I say kick it off, that's when I'm going to start doing the 90-minute live streams just for the membership club, private live streams just for the membership club, just for the people who are part of that club. We're going to be doing every week 90-minute live streams where we can go in more depth like I did today. See, I normally don't do these type of videos on YouTube. I did one this morning, but I normally don't do this. Normally I do something totally different, right? So these are the kind of videos you'll get in the membership club, but more in depth, right? We're going to look at more companies. Not that I'm some stock analyst, because I'm not. But I can tell you I've invested in companies. I can tell you I've worked with companies for 25 years, looking at balance sheet, income statements. So I know exactly what I'm looking at when I look at them. I don't care how big they are. They're all the same. They got a balance sheet and they got an income statement. Ain't nothing different. Apple is going to have a balance sheet. Apple is going to have an income statement. And as long as you know what you're looking at when you look at the balance sheet and the income statement, you're good. Doesn't matter how big the company is. I know what I'm looking at. So I know how to go and look at these companies, but better yet, I have experience investing in these companies and what they've done for my net worth. So that's the kind of stuff we're going to be discussing along with real estate and some things like that. So if you want to be a part of the membership club, get over to the website, sign up, right? And let's rock and roll. Thank you guys. Appreciate it, man. Have a rest of your good Saturday. I'll be putting up some more content this afternoon, probably some edited content like I normally do every day, because I'm on a 10-year mission. I'm on a 10-year grind where I'm going to give you guys as much content as I can. I'm going to flood you guys with content. And I know if I help enough people get what they want, I get what I want. It's pretty simple, man. It ain't hard out here, man. It's not hard. As long as you know the fundamental stuff, help enough people get what they want, you get what you want. Simple. We make it hard, but it's not. It's pretty simple. Earn, keep what you earn, invest it. Pretty simple. What's hard is we don't want to wait. Gotta wait, guys. Gotta be patient. And I know a lot of y'all are, so thank you. I know a lot of y'all rocking with me. Thank you. I appreciate you. And guys, I'll see you tomorrow, 10:30 a.m. Eastern time tomorrow with another live stream and some more content. Like I said, have a wonderful rest of your Saturday. Lock it in with a thumbs up before you get out here if you don't mind. Go check out those links down in the description box for Moo and for the website and for Instagram to give me a follow on Instagram, and then send me an email, let you know that you're rocking with me. Do those 3 things for me. I would appreciate it. Thoughts become things. You can see it in your mind. You can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy, get wealthy, and I'll catch you guys on the next one. Peace.